All right, welcome to session 11 of Sharpen Your Edge and Learn to Trade Fearlessly. Today we're going to talk about how news moves the markets. There's really no shortage of news, and in particular financial news, to say nothing of the reaction to it. Right or wrong or indifferent, news really does matter when it comes to trading. How and what do you read? How do you interpret news that may move the markets? Can you trade the news? How should you trade in response to such information, or should you really respond at all? If you do trade the news, be prepared to respond and adjust quickly. And what we're going to talk about here in the next few minutes is the four main or common types of news releases. Let's start with corporate earnings. The release. Corporate earnings reports can trigger some of the most volatile and potentially profitable periods of trading for a company's stock. Since we don't trade individual stocks, we watch how certain stocks may affect the indexes we trade or the broader markets overall. The key here is usually how the numbers compare with analysts' expectations. However, often the news is already baked into the price of the stock or index ahead of the actual release. So what's the response? How do we trade this or play this? Well, most of the time, really, we should be considering waiting to trade on earnings until after the company hosted call, during which officials may talk about the underlying health of the business, revise their outlook for the future earnings, or reveal other data not made available in the earnings release. Economic data, the release. U.S. government agencies periodically report various data on the health of the economy. Some of the most tradable may be data such as weekly initial jobless claims, monthly consumer price index data, monthly retail sales figures, monthly job reports, quarterly gross domestic product estimates, and just really tons of other things. So watch for the subsequent corrections or revisions after the initial data is released. These revisions can be significantly different from initial numbers. How do we respond to it? Well, we should be mindful of expectations when trading in response to economic data. Many news sites report economists' consensus outlooks ahead of time, and the market will often move, at least initially, based on whether the numbers are better or worse than the median estimates. Number three, Fed announcements, the release. Tracking the Federal Reserve in the direction of the monetary policy isn't just about trading on rate hikes or cuts. While those decisions made by the Fed's rate-setting operations, Federal Open Market Committee, or the FOMC, are important, they may be widely telegraphed by Fed officials ahead of time. Most influential is the FOMC's forecast for interest rates and other policies moving forward. Well, we know this. We trade this whenever these come up, but we do. Every day Keith talks about when certain members of the Fed are talking here and there. Well, they are telegraphing or projecting what's going to happen in the next Fed announcement, next Fed meetings and series of announcements. The response, what should we do? Well, we should keep an eye on the statements that accompanies the Fed rate decisions after each of its 8 scheduled meetings every year. Even slight changes in wording from meeting to meeting can lead to significant market moves. Don't we know that? Additionally, the reading of the minute 1 month after the FOMC meetings can be a significant trading event as well. And we trade those as well. And they typically do move. Boy, that last Fed announcement where we got the 50 basis point drop really created huge change in the markets, really gave us some nice swings in the market. And then number 4, the federal fiscal policy changes, the release. Unscheduled policy announcements can make a dramatic impact on stock prices. Unfortunately, by the time actual legislation is approved, which can be months or years later, if it's approved at all, is usually already baked into valuations and the markets. Those looking to capitalize on potential policy shifts should heed the adage, buy the rumor, sell the news. That is, considering entering a trade around the time of the policy is announced. when expectations are often at their peak and exiting before that blue sky proposal is inevitably brought down to earth. And that is it. The resources for this come from Schwab.com, from MarketWatch.com, and the outline was produced by Brian, and my much appreciation goes to Brian. So those are the four, and those are the four things we talked about. And every morning Keith gives us his analysis, which is great. So really watch for Keith's daily report every morning prior to the beginning of each trading session. This is good, important news that we should have. And that, ladies and gentlemen, is it for today's lesson.